Good afternoon, Mr. Fountain.
Hi, Shawnette. How are you doing?
I'm well. And yourself?
I'm good, thank you. Shawnette, what happened to your midterm?
Mr. Fountain, I have to. I'll talk to you after class.
Well, it's okay. You can, not a problem. But I've marked, I mean, Anyway, we'll talk after class. I thought maybe I missed it.
Okay.
Excuse me. Okay, it's 6:10. Given everybody a chance to get here, we'll start the lecture. So tonight we're going to be talking about commercial bank operations, and we have looked at mortgage markets and debt markets and um, equity markets and how they work, and equity, IPOs, and so forth. So the largest segment of the financial services industry is occupied by banks, and this is all types of banks. These are commercial banks as well as what we would consider to be offshore banks, as well as savings and loans entities. But mostly we're looking at commercial banks, right? And we're going to relate that again to the Bahamas experience. So commercial banks are the most important type of financial intermediary and financial institution. And whenever we think of financial institutions or intermediary, we automatically run to banks. And the reason for that is simply because they're well known. Everybody, probably not everybody, but most people have a bank account, and most of us understand the basics of how a bank works. They are a depository taking institution, so they take in the deposits, and then they turn around and lend out the deposits, the dollars that they've taken in as deposits. They lend it to various individuals, corporations, and governments or government entities. Now, on the value added side, what banks do is they add value to the credit process. They add value to the process of providing information uh, in terms of the types of credit, the types of things that they do. And they are really good at conducting individual transactions multiple times. So something like taking in a cash deposit or doing a wire transfer. So banks do a lot of other things besides this fundamental thing of core activity of taking in deposits and lending those deposits out in the form of various types of loans. Okay, so they're like other financial intermediaries. They perform that critical function of facilitating the funds flow from surplus units to deficit units. And whenever we think of banks, that's the first thing we think of, that they're passing this money from people who have it in abundance to people who don't have it but need it for their expansion of their businesses or just for their personal use. Okay. Now, commercial banks serve all types and sizes of surplus and deficit units. And in the Bahamas today, it is becoming very much a divided financial services uh, customer, in that you are almost forced to have a bank account or some entity that acts like a bank if you're going to really work within the mainstream of Bahamian commercial activities. Okay, if you do not have a bank account, it is difficult for you to do many things You do not get access to any type of plastic payment systems. You do not get access to any type of wire transfers, movement of money, right? The payment systems that the banks control, and so on and so forth. Okay? So most people, especially once you get into mainstream commercial activity, either as an employer or as an employee, right? Most people, right, will use a bank. Okay. The next thing that the banks do is they repackage funds from depositors to provide these loans of various sizes and maturities desired by the deficit units or the borrowers. Okay. Everybody doesn't want the loan to be exactly the same. Excuse me a moment, I just have to take this phone call. Hello? Hello? It couldn't have been that important. Nobody answered. Maybe it was a wrong number. Okay. So, as I was talking about the repackaging of their deposits, we can classify loans into different kinds or types of loans. However, most people want to have a loan that suits their needs. And even though the majority of us can fit into a particular style of loan, right, there are always going to be exceptions. And the banks will provide for that exception if it is in their commercial interest to do so. Okay? And the commercial banks are very good at assessing the credit worthiness and managing immense quantities of transactions and data. And if you think about it, there's an expression that we used to use in Lloyd's Bank when I worked for them in New York as a trainee. What they used to use was banks reconcile to the penny. To the penny. That means that you have to have the records keeping systems that will allow you to trace a transaction, no matter how small it is, right, through the bank's accounting system, to find it, right, and understand where it came from and where it was supposed to go, and if it has been handled in the proper manner. That is, in today's world, that is billions of transactions, that is lots and lots of data about their customers as well as their customers' habits. That's on the what they call the soft side, and on the hard side, there's lots of accounting data about our customers, about your customers. Okay? And banks have been moving in that direction for the past 60 years, and they have an awful lot of information about you. In the Bahamas, it's the same, and they're moving that way even stronger now. So if you're not in the banking system, it's difficult, but once you're in, they have an awful lot of information about you, whether you like it or not. Okay? So we have, over the past 33 years, there's been a steady decline in the number of commercial banks worldwide. And most of that is just due to consolidations within each geographical market so that they can try and achieve economies of scale. Now, the reason that has happened is straightforward. If you look in the Bahamas, we are basically overbanked. We have 3 Canadian banks, and we have three locally owned banks. Okay, and that is for a population of approximately, let's just say, 300,000 people. Okay, that is way overbanked. Right. On top of that, okay, we are an archipelago nation, so you can't have lots of places. You cannot have branches concentrated on every island. You can't have branches sort of stuck in Nassau, right? You have to cover as much of the territory as you possibly can. However, nowadays, with the use of technology, you can get around some of those limitations, geographical limitations, right? And the technology is also one of the driving forces in banks consolidating so that they can get the economies of scale. And you need economies of scale to handle so many transactions and to handle so much data that a bank manages on a daily basis. Okay? There've also been an expansion overseas, the major US, Canadian, and European banks. You don't see too many banks coming out of the Far East and out of
Hello.
Latin America. Hello. And who am I speaking to, or who was that?
I trying to sting him. This caller.
Hi, Carla. There you are. Nice to see you. Okay. We're talking about commercial banks. Looks like you're not sure, Carla. You okay? Okay. So, right, we were talking about commercial banks and how the number of banks have declined over the last 33 to 35 years. And it's simply because, as I've said, they've been consolidating within geographical markets, right? First Caribbean and Barclays. Sorry, First Caribbean is the combination of CIBC and Barclays Bank. Royal Fidelity, a joint venture, right? And so we had Workers Bank, which was bought by Bank of the Bahamas, and we will continue to see some of that. Not in the near future, but we will have at least one more merger in the Bahamas because, as I've said, we're overbanked. Okay, and then one of the things that the banks worldwide have been doing is they have been conducting acquisitions of other types of financial firms. So what's happened is, like, you think of credit cards, the banks own credit cards, but they've also purchased cards from other card operations that were not necessarily bank cards, right? Now, in general, major commercial banks follow the universal banking business model. And that business model we discussed very early on in this course. And the universal banking business model is where what we would think of as everything under one roof: securities, insurance, and banking, all under one roof. They're not separated out. Okay. They provide the banking, the securities, and insurance services to their customers, either directly or indirectly via subsidiaries. Okay? And this was very much the model in Europe, right? And in the Far East. In the United States, it was always different. But they now use the universal banking model, and that's what we see the most of when we go forward in banking nowadays, right? Okay. Now, the easiest way for you to have a deeper understanding of how a bank works is if you look at their main sources and main uses of funds and off-balance sheet activities. Okay. Okay. So what I mean is, if you took a balance sheet for a bank, right, and you looked at it in fundamental terms, you should be able to piece together where they're getting their money from and how they're lending it by category. Okay. Okay. So the way we tend to do this, okay, is we look at the liabilities and equity sections, and this indicates the sources of funds. and then we look at the asset section, and it indicates its uses of funds. Okay. Now I have here a review of annual financial statements. So at this stage, usually when I'm doing this course in person, right, I will give out some financial statements and have everybody take a look at it. Now, unfortunately, that's not possible. Okay. Yeah. That's not possible to do. So what we have to do is we have to sort of take my word for it and look at it. Okay. Your balance sheet in a bank is cut up as similar or categorized similar to any other balance sheet. Okay. And on the only difference is the assets are the loans. So if you look at a bank's balance sheet, okay, the assets are the loans and the deposits are the liabilities. Okay. Now, why is that? The deposits are what people have entrusted to the bank. They're put into an account in the customer's name or the depositor's name, right? Right. But the funds do not belong to the bank. The bank is a custodian of the funds. Now, in legal terms, that can be argued and successfully, well, the funds belong to the bank because of the responsibility the bank bears for making sure that they're there and in place. Okay, so what you have is on the liability side, the different types of deposits that a bank can take on. Okay, and they will be short-term deposits or long-term deposits. If they're short-term deposits, they're generally going to be less than 1 year, and they will be held in the current liability sections of the bank's balance sheet. Okay. If they're long-term deposits, then they will be held further down on the liability side of the bank's balance sheet, right? Because they're going to be for greater than 1 year, a term of greater than 1 year. Okay. By the way, we are looking at chapter 17. We've skipped all of those things about the derivatives and the options market. Okay. And we're just looking at commercial bank operations and okay. So if you go to chapter 17, right, on my book, in my book, it is page 444, and we're looking at bank sources of funds. Okay. Now remember, in a bank, the liabilities are the deposits, the customer's money. The assets is the bank's money, and that are the loans that the bank has made to their customers. Okay. So when we look at the major sources of funds for a bank, we're going to be looking at the transaction deposits. We're going to be looking at the savings deposits. We're going to be looking at the time deposits, and we're going to be looking at money market deposits. Okay. Now, in the Bahamas, right, we don't see number 4, money market deposits, because we don't have a money market here in where we can trade these financial securities. We do have a short-term borrowing market between banks, but that's about it. Okay, so when you look at your deposit base on a bank's balance sheet, you will see transaction deposits, which we would consider to be checking accounts, checking account balances. Savings account balances, straightforward. Time deposits would be fixed term deposits. Yeah. And money market deposit accounts would be customers' accounts where they have invested the funds into money market securities. Now, if you were in the United States or in Canada, those money market deposit accounts would have invested in funds like commercial paper, right? Bankers' acceptances, short-term US or Canadian government treasury bills, okay? So all the money market instruments that we looked at earlier in the course when we were talking about money markets, the bank would invest the money that customers put into their money market deposit accounts into those types of instruments, okay? Now, the other source of funds for a bank are borrowed funds. These are funds when they can borrow it from other institutions, okay? Deposit accounts that we're looking at here are usually funds that they're borrowed from consumers or large corporations, but they can borrow funds in the true sense of the word. They're not deposits, but borrowed funds from the Federal Reserve, or if they're in the Bahamas, the central bank. Remember, the central bank and Bank of the Bahamas are considered to be the bank, the borrower, lender of last resort, sorry, okay? So they can borrow funds. A bank, commercial bank can borrow funds.
So,
from the
Mr. Funkton,
Federal
they could
Reserve.
borrow, they could be in the Bahamas, we could borrow from Central Bank or Bank of the Bahamas, either or,
No,
right?
I don't
Or
understand what you mean when you say either or. You
you
can
said
borrow from,
in the Bahamas, we can borrow funds from Central Bank.
yes. The bank, Commonwealth Bank, can borrow money from the central bank. Commonwealth Bank, go on.
So where does Bank of the Bahamas play its part as a borrowing entity?
I don't know where you're getting borrowing to the Bahamas from, Carla.
Oh,
Unless
I thought you say Central Bank or Bank of the Bahamas.
No, Central Bank or Central Bank of the Bahamas, not Bank of the Bahamas.
Oh, okay, sorry.
So if you looked at Commonwealth Bank's liability section of their balance sheet, you will see the first three categories there that we have under deposit accounts. And then you will see where they have borrowed funds from financial institutions. They may have borrowed it from the central bank, but they can also borrow it from other commercial banks. Yeah. Commonwealth Bank can borrow money from Royal, Bank of the Bahamas, Scotia, CIBC, First Caribbean, any financial institution it has established that relationship with, and they're happy to lend them the money in terms of credit worthiness. And that happens on a regular basis. Okay. At the moment, because there is such an amount of liquidity in the system, most banks aren't borrowing from each other because they just have excess funds.
But they could.
But they could, yes.
Okay.
When I worked for Barclays Bank, I worked in the area called customer foreign currency, and I had a responsibility for managing the B-dollar book, funding book for the bank. And whenever we were sometimes short of B-dollars, we could borrow from one of the other commercial banks. Okay, these are short-term loans. Usually they're no longer than about a week. Okay, but it could be longer if we chose. Okay. Now the major sources of funds are, again, you can borrow funds through repurchase agreements, and you can borrow them through euro-dollar bond borrowings. Now, in the Bahamas, we don't have repurchase agreements. Okay, in the Bahamas, we do have euro dollars, but the commercial banks in the Bahamas do not have access to euro dollars, because, right, it's against exchange control regulations. So they can't borrow from the euro dollar market. That's pretty much only in the hands of the offshore banks. Okay. Then the long-term sources of funds are bonds that have been issued by the bank, okay, and the bank's capital. Now, in the Bahamas, right, we could have a couple of years ago, maybe about 10 years ago, if you issued preferred stock, that could be counted as part of your capital by the central bank. So a lot of the commercial banks in the Bahamas that are incorporated in the Bahamas issued preferred stock if they were publicly traded. So Bank of the Bahamas had them, CIBC First Caribbean, Royal Fidelity, and Commonwealth Bank had all issued preferred stock. But about maybe 6 years ago, 7 years ago, the central bank, in shifting to the Basel II standard for bank regulations, right, they cut out using preferred shares, right, as part of the bank's issued capital. So at that time, all those banks had to redeem some of those shares and convert them into common shares or pay them off directly. Okay, so I'm just going to go back a page here. Okay, right, and we're talking about the major sources of funds for a bank. Deposits, we got that. That's the consumer coming in and putting his money into an account, and there are different types of deposit accounts. Okay, they can borrow funds. Okay, a bank can borrow funds from other institutions. Right, the most obvious one is the central bank. Right, in the Bahamas, they can also borrow funds through the money markets. Okay, remember, in the money markets in the United States, you can issue negotiated certificates of deposits, which is a means which are usually issued by banks, and it's a means of funding the bank. Okay, they could use repurchase agreements if they're holding securities. Okay, they can do euro dollar borrowings if it's not prohibited by their central bank. In the Bahamas, commercial banks are prohibited from doing that. Okay, and then you can have long-term sources of funds, which are the issuance of bonds by the bank itself, as well as the capital of the bank, which would be the issuance of stock if it's publicly traded, or if it's privately held, like Scotiabank Bahamas, which is 100% owned by Scotiabank out of Canada, then the parent company can inject capital into the bank. Okay? Any questions by anybody about bank sources of funds, the major sources of funds? Anybody? Carlo? Anthony? Okay. So we're going to just go through the deposit listings now. And we're going to talk about transaction deposits. Okay. Now, these are just traditional demand deposit accounts or checking accounts, right? And it allows withdrawal via checks. Now, we are starting to see in the Bahamas where the amount of checks written is decreasing considerably, right? I don't know if you're noticing that in your places of work, if you're in banks, but you don't find that people are issuing a lot of checks. They're using plastics. So we're becoming more like the United States, Canada, and the UK, right? You're just cutting out the amount of checks. The banks love that. The banks love that we are trying we are not using checks as much. And they actually encourage that and actively try to get their consumers or their customers, right, to not use checks. They actually make it more expensive for you, right, to use a check. Okay, so Carla and Anthony, right, think, can you tell me of a way that banks in the Bahamas are trying to dissuade their customers from using checks?
I think a way to try to persuade them to stop using check is to encourage them maybe to use online banking. And then the
Yeah.
fees, they also increase
The
the
fees.
fees. Yeah. And
The
the
fees.
overdraft or under, if they have an overdraft, the overdraft charges. So all the fees and stuff they incur with using the checks, they, well, we suggest that they try to get more familiar with using the online banking to do transfers.
So let's see if we can put that slightly different. Well, they are encouraging you to go use electronic banking. But besides that, what concrete steps have they taken? One, it is more expensive for you to write checks than to use your debit or credit card, correct? So they've increased the fees. If your check is returned, what's the return check fee now?
I think it's $25 if it's returned.
$25 if it's returned for any reason.
Yeah, so
$25 for any reason. Okay, that's the
yeah,
fee. That's gone up from about $15. It's gone to 25. And don't be surprised if that gets up to $30, $35 probably
yeah.
within the next year and a half. Okay,
So
so again, that's another way they've increased their fees. Okay, another way they've done it. What did Antonique? What did Royal Bank do with people coming in with checks drawn on them? What concrete action did they do to try and dissuade you from using checks?
Well, I'm not sure, but maybe the time frame of when the checks are drawn. Like, because I feel
Yeah.
like with most places now, like I think it was Super Value. I think it was like they don't accept checks at all. And so I
Well,
think because they were saying like the process of cashing the check
a lot of people
was a bit.
is I think a lot of people likes to give super value. Their problem was a lot of persons go in with the check and come to find out they don't have the cash available when the check is deposited in the bank, so it have to be returned. So it
okay,
will put super value at a
but
loss.
that's a super value problem. That's not a
Right.
Royal Bank
Yeah.
trying to get, or any bank trying to discourage checks. Something a little bit more specific. Anybody remember when Royal came out about maybe 4 or 5 years ago and said you cannot cash a Royal Bank check, right? If you do not have an account with them.
Royal Bank
With Royal
account.
Bank,
Yeah.
yeah.
They said if Mr. Fountain writes a check to Colette and it's drawn on Royal Bank and she comes into the bank to cash that check, they will not cash it.
Yeah.
Remember that hullabaloo? Everybody get mad. They said they will only do it but for a fee. And then they stopped it altogether. Yeah.
But that wasn't only Royal Bank, eh?
It was Royal Bank that started it.
Oh, okay. The
Royal
Scotiabank, I think, does that too.
Scotiabank doesn't do that per se, but they discourage it a lot. Okay, but Royal Bank has a definitive policy. They will not cash a check drawn on them, right, if you do not have an account at their bank. So in other words, you got to deposit the check. Now, what Scotiabank does is they say the same thing, but they say it in a slightly different manner. They say you must deposit the check. Yeah. Okay, now that's the bottom line. So the impact of that is it discourages people from writing checks. Yeah. Okay. It discourages people from writing checks. When was the last time you used your check to pay water and sewage or BTC?
I haven't, because I've been doing everything online.
How about you, Ms. Russell?
Never is transfer online. That's just
How
about
about you,
everywhere.
Ms. Knowles?
Online,
But you used to write
everything.
checks.
Yes.
But you used to write checks.
Yes.
Yes.
Okay. Well, if you go into water and sewage and you want to pay by check, they will no longer accept personal checks.
Really?
They'll accept corporate checks, but no longer personal checks. Isn't that interesting? And BTC will not accept checks at all. So when you go into the line to go pay something, it's either credit card or cash. Okay. Now the banks will argue that they're doing that because if it's cash, they don't have any risk of the check of something going wrong. And if it's a credit card or a debit card, they know immediately whether or not it will go through because they will get an approval. Okay. There's one other thing that's happened, right? It's affecting the use of checks.
Don't you have to have a minimum balance and there's really no interest on checking accounts?
Yeah, all of that's true, but that's been around a long time. The banks are trying to get rid of checks. That's what they're moving towards. So they've taken concrete steps to do that. What's another concrete step that they've done, even though it wasn't them?
Is check card still open?
I don't think so.
Okay.
I don't think so. Okay.
That's just for my personal. Yeah, okay. Yeah.
Have any of y'all used Cash and Go or any of those services where you can go in and make a payment for your utilities?
I just was gonna say that. But the banks make it even more easier than that, because like with Royal Bank, they have those companies now as a payee. So you don't even have to go into a cash for go. Like BTC and BTC and BPL, all already set up with RBC. So all you have to do is select that and put in your account number.
Okay. So you're correct, but think of it like this, Ms. Russell. Okay, just consider it like this. If you have a bank account and you don't have electronic banking, how can you pay BEC, BTC, or water and sewage? They don't take your checks, so how can you pay them? It means you would have to go into the bank. Sorry, not go into the bank. You would have to use cash and go to a place where you can do it. Now you can pay them all through Cash and Go.
Yeah. You don't have to go into the bank, Mr. Fountain, because if you have your credit card and you know BC or you
Carla, if you do not have a bank account, how do you pay utilities? You can't use a check, they won't accept it, right? You don't have a bank account, you have no debit card, you have no credit card. You have to handle cash. So how do you do it? Okay, so that's where the Cash and Goes come in, right? Also, if you do have a checking account, right, the Cash and Go will take the check from you. You understand? Okay, so all I'm trying to say to you is that the banks in the Bahamas have taken concrete steps to reduce the usage of checks. They want you to do what the three of y'all are doing, Carla, Ms. Russell, Ms. Knowles, what all y'all are doing, which is basically electronic banking using plastic or wire transfers. They even want you to stop using your credit card. They want you to use your debit card and what? Transfers. Now that was accelerated during the pandemic, remember? You know how much easier it is for you to do a wire transfer now? But think about it. Don't the banks make more money when they do a wire transfer in terms of a transaction cost? How much y'all how much y'all charge somebody for wire transfer to a BTC or to make a payment to somebody else's account, Carla?
Um,
I should ask Colette that. Colette, how
yeah,
much y'all charge?
$5 plus VAT and something else. I do it enough so I know it.
$5. So if I have an account at Commonwealth Bank, you will charge me $5 to make a payment to Ms. Russell's account at Royal Bank of Canada.
Yes, sir.
Okay. And how much will Royal Bank of Canada charge you, Ms. Russell, to receive the wire transfer from Commonwealth Bank?
Well, I think the last time I was charged was like $6.
So that's $11 to do a wire transfer, right? A check only costs you the 25 cents in government stamp duty and the minimum balances. Think about it, okay? So, okay, we were talking about transaction deposits. We're moving away from traditional demand deposit accounts accessed by checks. We're going to have demand deposit accounts accessed by plastic, right? Or electronic banking. The debit cards are demand deposit accounts, right? That's where the access goes. Transfers, the same thing, okay? Now, they used to require a small minimum balance and it pays no interest. That is going to continue, right, with access through the debit cards or through wire transfer, okay? And then, right, we classify as transaction accounts that provide a source of funds that can be withdrawn by customers. So the definition of a transaction account is it's an account where the customer can withdraw the funds, right, without any notice of any kind, right? So if you think about it, if you write a check, once the check gets to the bank, right, they have to pay the bank money out, okay? If you use your debit card, once the transaction comes through to the bank, right, and it's cleared and everything, the money goes out the bank right away. If you do a wire transfer through electronic transfer, through your electronic banking, it's the same thing. So all of these types of accounts are coming out of what we used to call, right, the traditional demand deposit account. Now that's going to change because it's being done electronically, right? They're going to let you access any account that you want, okay? But they'll shift it around so that the balances may have to be a little bit higher, okay? Now, the reason I'm going through all of this at this juncture when we're talking about demand transaction deposits is because it's changing so quickly. In your career in the bank, all three of y'all, whether, I don't know if you work in a bank, Ms. Russell, but the two of y'all working in Commonwealth Bank, you have seen a significant change in how people access their accounts. Okay? And you're also starting to see a significant change in the number of people coming into the branch, okay, to do what we would consider as bankers traditional or routine transactions, okay? I go into my bank to make a withdrawal, to make a deposit, okay, because I don't have my paycheck deposited into the bank automatically. Yeah, that's the only reason I go into a bank. I can get cash from the ATM. I pay all my bills online. Okay. Yeah. I don't have any loans, so at the moment that is, so I don't have to go into the bank to talk about a loan. So what are all these people doing that are going into the bank? And then the last bit is Scotiabank has put in place a regulation where they will not, right, accept any cash deposits over the counter or pay out any cash over the counter for amounts less than $1,500. Bank of the Bahamas has done the same thing. Okay, CIBC has done the same thing. Has Commonwealth Bank done that?
not yet.
Do you think you're going to see it? I think you will.
Mm-hmm.
Your electronic banking is getting used a lot more than it used to be
Yeah.
in Commonwealth Bank. Okay, so we go to savings deposits, right? Now, the traditional savings account does not permit check withdrawals, that is, money coming out on demand. So the idea was that you would keep the money in the account, right? Earn more interest on it because you left it there for longer, and you had to give the bank notice that you were going to take it out. So you couldn't just come in on Monday and say, "Give me the money." You would have to come in and you tell them you're coming in, and you could get it on Wednesday or something like that. Now, a lot of that has gone away, okay? But the essential entity is that it's for customers with small amounts of funds. They can place it in the bank and they will get some interest, okay? Not a lot by any means, okay? Yeah? And it usually requires a small minimum balance to cut down on the workload that the bank has. You know, if you can imagine having 500 savings accounts with less than $100 in them, it'll drive you crazy. But people did it, okay? So they're not going to go away, these savings deposits, but right, you're going to find where it's going to be more expensive to maintain them, okay? Yeah, because the banks don't make money off of those little small deposits. And they used to be a very good source of funds because it was cheap funds, yeah? But nowadays, that's becoming an issue. Then we have the traditional time deposits or fixed deposits, okay? This is the one that everybody knows and loves. A time deposit in the US is also called a CD. In the UK, they call it a fixed term deposit or fixed deposit for short. In the US, they call it a CD or certificate of deposit, okay? And you cannot withdraw any money until the specified maturity date. Then they changed it to where you can withdraw it, but you have to give them notice and you will have to pay some kind of a penalty. And the penalty is the foregoing of interest that you would have earned and a small flat fee usually, okay? Now, the time deposit or the CD or the fixed term deposit is the primary fundraising, it is the primary account for banks when they are trying to raise funds, okay? Yeah? If you have hit the jackpot and you get your $500,000, you would not put your money into a checking account or into a savings account. You would put the bulk of it into a fixed term deposit, okay? Because the rate of interest was so much higher, okay? And you could afford to leave it for a fixed period up to 1 year if necessary, because you didn't feel that you needed to have the funds at that time. So banks have always looked to those types of account, time deposit accounts, as their primary source of funding of their loans. And these are the deposits, right, that are used for most loans. These are the deposits that are used to fund the loans that the bank makes. They can use the savings accounts, they can use the checking accounts, but remember, the money could come out, right, any time out of a checking account, and usually within 2 days from a savings account. Okay, so you have to leave a lot more of it there, waiting for the customer to come and take it out. Okay. The fixed term deposit usually has a minimum, right? Although in the Bahamas, that's been dropped down to, I think, $1,000 now. Y'all could tell me it's about $1,000. It used to be like you needed to have a $5,000 deposit or even $10,000. And that was great for the banks because you would save your money in a savings account until it got up to that amount and then shift it over to term deposit, okay? It's offered in a wide variety of amounts and terms. The traditional run for fixed term deposits are 1 week, For consumers, that is 1 week, 30 days, 60, 90, then 180 days, then 1 year. Now you can get them for odd periods. Now you can get them for greater than 1 year and so forth. But those are time deposits. Okay. The other type of time deposit that we have are the negotiated certificates of deposits. Now, again, we do not see these here in the Bahamas, okay, because these can be traded on the money markets, okay? And these are CDs that are offered by large banks to corporations, and it's more on a customized basis. They act the same way as a retail fixed term deposit, but for usually shorter terms and a much larger minimum, right? The minimum used to be $100,000 to $500,000. Now the minimums run around about $1 million. Okay, these are for negotiated certificates of deposit. Okay, and this is not a very stable market because the corporations who they go to are very, very aggressive in managing their free cash flow or their free funds. Okay. And because the corporations are as big, if not bigger than the banks, and have just as good, if not better, credit rating, okay, they can, okay, put their money in lots of different places, okay. So for an extra 25 basis points or 15 basis points, they will move their money, okay. So they don't keep their money in negotiated certificates of deposits for a very long time. Okay. There's no secondary market for these. Okay. So they can't trade in the secondary market. They only open up, they're only in the primary market. Okay. And then we have money market deposit accounts. Okay. Now these differ from conventional fixed term deposits as they don't have a specific maturity date. I really got to improve my spelling here. As they do not have a specific maturity date. Okay, they're more liquid than retail fixed term deposits, but they offer a lower interest rate. Okay, they provide limited check writing privileges, i.e., a limited number of transactions per month, usually around anywhere from about 3 to 6 once a week, or 4 to 6 once a week is about all they'll do. And they require a larger minimum balance. Now, again, we do not have these in the Bahamas, and these really work well in the States because, okay, what they're doing is you have placed your funds into one of these accounts. They take the money out of the account, invest it into the money market securities, okay, and then they try to hold a cushion or a contingency fund so that if you came and wanted to write a check for $5,000 or $10,000, there is enough money there to do that without disturbing the money market, the money market instrument in which it's been placed. Okay. Now, borrowed funds. Fed funds purchased or borrowed. We say purchased because that's how we talk about Fed funds. But what it means is that you're borrowing, you're not lending them money. Okay? So the Fed funds market allow member institutions to meet short-term liquidity needs. So you can go in and in the US through the Fed funds market, okay, borrow money, which is considerable sums, considerable amounts for like overnight, right? What they call next day tomorrow, next day, then for up to 1 week and longer. But usually these are for very short periods. Usually they're overnight and they're no more than a week. Okay? Okay. And the reason for that is because on the weekends, on a Friday, if you need to do it, overnight won't work for you. You have to get to Monday. Okay? So that's tomorrow, next day to cover that. And then depending on when you expect to get your funds in, you want to be a little bit cautious. You'll go out a week. Okay? This market is very, very liquid. And so banks can act, the commercial bank can act as a lender on one day, and on the following day, turn around and lend money out to another bank. Okay? And they're checking their balances at the Fed against their claims on those balances. So within a bank in, say, New York, like JP Morgan Chase, there's maybe two or three dealers in their dealing room that deal in nothing but Fed funds, and they're running a up to the minute balance of what is in that account and what types of funds, what the size of the funds coming out and the size of the funds coming in, so that they can always be sure to meet the requirements that the bank needs. Okay? Okay. Now, the interest rate on these types of loans are called the Fed fund rate. And we had talked about that when we were looking at the Federal Reserve. Okay? Okay. And like I said, it's typically only from 1 to 7 days. And you don't usually say days, you say overnight. Okay? Because if I give it to you on Monday morning at 9 o'clock and I get it back from you on Monday afternoon at 3 o'clock, that's called an intraday as opposed to an overnight. Okay? Sorry. Okay. Now, when you borrow from the central bank, as opposed to the Federal Reserve, the central bank of the Bahamas, right? They provide short-term loans to member institutions, usually 1 to 3 weeks for liquidity purposes. Okay. Now, the interest rate, okay, that loan is made at is called the discount rate, because it is the rate between the central bank and the bank, the commercial bank, who is their member of the central bank licensees in the Bahamas. Okay, all right. It is, or the primary credit lending rate. Okay, it's usually set in the U.S. to exceed the Fed funds rate, because they don't want to lend the money to you. Okay, in the U.S. they want you to go through the Fed fund and borrow it through the Fed funds market and borrow it from another member of the Fed. Okay, now in the Bahamas, okay, you can do the same thing, but we don't have a Fed funds rate per se. But what they're trying to do is they're trying not to lend you money from the central bank, because it's an indication that you're not managing your bank well or the bank's liquidity well. Okay? So usually when a bank goes in to borrow from the central bank, it's seen as negative, even though it may be because they just have an unanticipated shortage of their reserves or in their funding for large drawdowns. But both of those things are around unanticipated. And if you think about it, it should not be unanticipated if you're keeping track of your inflows and outflows. Cheer up, Carla. Okay. The next type of borrowed funds that we were looking at is repurchase agreements or repos. Again, we do not have these in the Bahamas. We have them in the United States, and they are used a lot, okay, in the US, okay? And this is the sale of securities by one party to another with an agreement to repurchase the securities at a specified date and price, right? The term can be for weeks, but is usually 1 to 7 days. All right, the securities which serve as collateral for the repos are usually treasury bills. Okay, and since they're treasury bills, the yield is usually less than the Fed funds rate. Okay, as the transaction is secured. Remember, when you're borrowing to the Fed funds, right, you are borrowing unsecured. When you're doing repos, you have the security of you are using as collateral the security that you have borrowed. Okay, and that's why the U.S. Treasury bills work there. All of these that we've just looked at, the repos and the Fed funds rate and borrowing from the central bank, okay, are all about getting liquidity for the borrowing bank quickly. Okay, you can do a repo agreement in 1 day. You can borrow through the Fed funds, right, under the Fed funds market at 9 a.m. in the morning, right, as long as the market is open. Okay, so it's quick, right? You're not having to wait 2 and 3 days to sign papers and so forth like that. You don't have to issue anything. You just have to go in and agree the terms between the two dealers of the banks, and they'll sort it out. And that can all be done within 15, not even 15 minutes these days. Okay, so all of this stuff gives the banks options that will help them to maintain the liquidity requirements or any other requirements they may have when it comes to meeting the reserve requirements or any other types of requirements from the central bank or the the Federal Reserve. Okay. Euro-dollar borrowings. Okay. Now, this is probably the largest money market in the world. Okay. The largest money market in the world. Okay. In the Bahamas, because of our exchange control regulations, commercial banks cannot access the euro-dollar market. The only way they can do that is if their parent company, their parent bank, Royal, Scotia, CIBC, were to access the market on their behalf and pass the funds on to them. Okay? That could be done. And when they get the funds, they're going to be converted to Bahamian dollars. Okay? And that is something they do not want to do unless they absolutely have to. Okay? So it's easier to think of it like this. Commercial banks in the Bahamas cannot access, right, the euro-dollar market for their domestic banking operations. Of course, they can access it for their offshore banking operations because they're dealing in euro dollars. Okay? Okay. The reason it's the largest money market operation in the world is because it's a bank market, but other financial institutions are in it and large corporations. So Toyota, Walmart, Exxon, Amazon, Microsoft, right? Standard Oil, okay? All of these big entities, Royal Dutch Shell, they are all participating in the euro-dollar market, okay? The standard money market terms and rates are available, and they're usually done at a standard. Now, the last time I looked, it was like the minimum amount was US $5 million. for a deposit. Okay, their rates are like other fixed term deposit markets. They go from overnight, tomorrow, next day, 1 week, 30 days, 60 days, 90 days, 180 days, 1 year. Okay. They also can give you custom rates if you want. All you need to do is have enough money or enough credibility. Okay. So they go from overnight to 1 year. Now, overnight means I take the deposit from the customer in the market on Monday, and I pay it back by Tuesday afternoon. Usually it's Tuesday morning. So you can see it's really only there to meet your immediate liquidity requirements. Now, most banks would use the euro dollar markets to fund their large international loans, okay? Because they can get the money there at a very good rate. Okay, so now we're talking about long-term sources of funding for banks, okay? And as I said before, they can be bonds. Now make sure you understand this. The bank issues the bond. So Commonwealth Bank issues a bond, right, to the public and uses that money, okay, or takes that money in as funding. We're not talking about deposits. We're talking about issuing a bond. So to give you an example, right, in 2009, and the tail end of the financial crisis caused by the housing bubble, okay, Citibank issued close to $1 billion in bonds to shore up its balance sheet. Citibank's stock had gone from something like $40 a share to almost $2 a share. Okay. Okay. Now, when a bank issues a bond like that, they generally have a very much a specific set of things that they want to do with those monies. They don't just issue it willy-nilly. Usually, they're looking to finance long-term assets like land or buildings. So they want to build a new headquarters, they could use the funds for that. They want to increase the amount of their capital, right? They can use the bonds for that. Okay? Okay. Now, it's not often, maybe once every 10 years that a bank might issue, maybe once every 20 years, a bank might issue bonds to finance this type of thing like long-term assets, because banks really don't need that much long-term assets. Okay? They're in the business of raising deposits and lending those deposits out. Okay? And then the last one, the last long-term source of funds is bank capital. Now, basically, this is the funds acquired by the issuance of stock or the retention of earnings. So they issued stock maybe 10, 15 years ago. They may issue some more, or it's just the amount of cash, the amount of the percentage of their net income that they did not distribute in dividends. Okay? They go into the retained earnings section of your financial statements. Okay? And so they represent a source of long-term funds, and because they increase the capital retained earnings. They increase the capital of the bank. Okay? And they are not an obligation of the bank to pay out in the future. It isn't like they have to pay it out. They can keep it for as long as they want and use it. Right? Okay. And then all other sources of funds represents future obligations on the bank. So other than bank capital, all of the transaction accounts that we have, okay, they represent, okay, funds that you're going to have to repay because they're the depositors' funds. All of the money market accounts, all of the borrowings from other commercial banks or from the central bank, they all have to be repaid, okay? Bank capital is the only thing that you do not have to repay in the future. You just have to give the investors their dividends. Okay. So, any questions or queries about sources of funds for a bank?
Mr. Fountain, can you go back to the slide before this one, please?
That one?
Yes, thank you. I got it.
Don't fall asleep on me, Carla. I can see it now. You had a hard day today. You're barely holding on. Okay. Any questions, any comments, any clarification on bank sources of funds? Okay. Now, you need to remember this. If you look at the financial statements for a bank, in particular the balance sheet, you will see all of these types of categories on that balance sheet. It may not say exactly the same word, right, that I'm using, but it's going to be there, okay? You're going to see the bank capital. You're going to see bonds if they've issued it. You're going to see the borrowings from other banks, okay? You're going to see the deposits from customers, right? You're going to see it there. They may have it as a category with a note to it, and then they break it down into very small amounts or into smaller categories, okay? Now, let me give you all an idea. The last time I looked at the Bank of New York financial statements or annual financial statements, okay? They were close to 175 to 200 pages, right? In 10-point print, okay? Both sides of the page. That's how complicated, that's how detailed financial statements coming from banks are, okay? And all I'm saying to you is, I don't care how detailed it is or complex it is, it's going to have this information on there, okay? Because that is the nature of banks, okay? So last time, any questions or comments? Okay. Now we're looking at the other side of the balance sheet, okay? Sorry. This is still long-term sources of funds, and we're just going to talk a little bit about how the capital on a bank's balance sheet is classified into primary and secondary capital, okay? So primary capital results from the issuance of common or preferred stock or retained earnings, the retention of retained earnings. Secondary capital results from issuance of subordinate notes and bonds, okay? So if they issue new stock, it'll go into primary new common equity or common stock. It will go into primary capital classification, okay? If they issue a bond, it goes into secondary capital classifications, okay? Now, the reason for that separation or that distinction is because the regulatory authorities insist, right, that you break your capital up into different classifications so that they can see exactly what you're holding. And why is this? Because the bank's capital must be sufficient to absorb any operational losses, okay? And therefore, the capital is closely monitored by regulators. Now, I'm just gonna try and give you an example using one of my favorite banks, Bank of the Bahamas, okay? About, I think it was in 2014 and 2017, the government of the Bahamas, right, okay, purchased some 300 and I think it's, let's just call it $350 million worth of bad debt from Bank of the Bahamas. What did that do, right? From the Bank of the Bahamas point of view, those bad debts were taken off of its account, off of its incomes, off of its financial statements, and the money used to pay for it, right, okay, went in onto the bank's financial statements and could be placed into retained earnings, right? Which means that they would have boosted their capital by the amount of that injection of funds, okay? Yeah. If they did not do that, the Bank of the Bahamas would have been considered technically insolvent because their capital had eroded to a point where they could not meet the basic guidelines and requirements as set out by the Central Bank of the Bahamas. And therefore, they would have to declare bankruptcy, right? Or the central bank would have to step in and take over the running of the bank or something more drastic, okay? That happened within the last, since 2014, 2017, okay? So, okay, capital is very important and it's monitored by the regulators. That is what they call the Bank Supervision Unit in the Central Bank of the Bahamas. Okay, so if you look on section in Exhibit 17.2 in your text, right, you'll see a pie graph, a pie chart that shows, right, the sources of funds as a proportion of total liabilities. In other words, right, how much, okay, is as a percentage comes from the different sources of funds for a bank. So in this example that they have in the chapter, if you can find it, right, they're saying starting with savings deposits, right, including money markets, 30%. Small denomination time deposits, 20%. Borrowed funds, 17%. Large denomination time deposits, 16%. Okay? Other sources, 9%. Transaction deposits, 8%. So in looking at this chart, 36% come from time deposits, large and small. And, okay, the next biggest thing is 30%, which is different types of savings accounts. So between savings and fixed term deposits, right, you have approximately 66% of the bank's funding requirements. The next big one is the borrowed funds at almost 20%. Okay. Now you think of Commonwealth Bank, First Caribbean, Bank of the Bahamas, which are all publicly traded companies, and Royal Fidelity. And you could look at their financial statements and you would expect to see something like this if you were to do a close analysis. Okay. You cannot have in a bank, right, where the borrowed funds represent 35, 70% borrowed funds from other financial institutions, right? Because, yeah, it's not cheap money. Remember, a bank, okay, is a depository taking institution, right? So it's going to take in deposits from the public and pay interest, yeah? And they want to keep that cost, interest paid, as low as possible. If you're borrowing through the financial markets, the Fed funds, the interbank rates, the euro dollar markets, whatever, you're going to be paying market rates. Savings accounts and fixed term deposits, right? The interest rate on those types of accounts are below market rates. Even though they're higher than what you would normally get somewhere else, maybe, right? They're still below market rates, okay? They're actually based on market rates, and they shave off some of the interest that you would get, okay? So you need to understand that the worst thing that you can do if you're running a bank in terms of funding or sources of funds is rely on transactional deposits and deposits borrowed money from other institutions. That's a sure way for you not to be chief executive officer of the bank for very long. Okay, any questions about that pie chart? Well, you all are short chatty today. I guess we gotta wait till we get to something more exciting. Okay, now we go to uses of funds. Okay, so where does the bank use its funds? Again, this is on page 449 in my text. Okay, and it says uses of funds by banks. Cash, bank loans, investment in securities, Fed funds sold or loan out and repos, euro dollar loans, fixed assets, proprietary trading. Okay, cash, the amount of cash held in the bank in treasury. Okay, how much money you got in the vault, in the tillers, in the tills of the cashiers. Okay, how much money you can get your hands on right away that you're holding maybe in another, right, bank. Okay, cash isn't in the vault and in the tills, don't earn you any income, but you have to have it to meet the demands of your customers. Bank loans, obviously any loan that the bank makes to consumers or to institutions or corporates. Investment in securities, anytime you put money into securities that you're pretty short term, that you can get it back out if you need it. Fed funds, we talked about that. Euro dollar loans, instead of borrowing from the euro dollar market, right, you're placing deposits into the euro dollar market. Of course, fixed assets, because you got to have some place to go to the bathroom and air condition and keep the staff them happy, and the canteen and so forth. Although nowadays we're trying to get away from that. And proprietary trading. This is using the money to trade for your own benefit, not for the benefit of your customers. Okay? So cash, we're talking about funds of the central bank to meet the reserve requirement. I have a quick question for you, Colette. If you have funds, if you are the managing director of Commonwealth Bank and you put funds to meet your reserve requirements with the Central Bank of the Bahamas. Do you get any interest on that?
No,
Oh, your answer is no? You're absolutely correct. No. Okay. Do you get any interest off of the vault cash for liquidity to meet your depositors' demands and contingency needs?
no,
Nope. Okay. How do you decide how much cash to keep in the vault? How does somebody in Commonwealth Bank, or who decides how much money to keep in the vault at Commonwealth Bank? Or that
isn't that set by central bank?
the central bank tells you how much cash you have
That's
to keep in your
required.
vault.
And then,
The central bank tells you how much cash you have to keep in your vault.
no, you have to,
Don't think so.
you have to have a certain amount to meet the requirements of your customers' needs.
Okay, but how much is that? If you're not getting any interest off it, do you need to have in the whole of Commonwealth Bank?
No,
Right.
a percentage of the amount, what's on the, on customer savings and demand accounts or demand
Okay.
accounts.
Yep, that's correct. And you base it on your experience. Okay.
Yeah.
If you say, yeah, you're correct. You know, if you say 2% of the total deposit value has to be held in cash spread across all the branches of Commonwealth Bank, great. But if the main branch on Mackey Street, right, sees the most use of cash, you're going to have to put more there than, say, the branch in Abaco or Freeport, correct?
Correct.
And that's based on your experience, okay? Okay. So generally speaking, the banks maintain the barest minimum of cash reserves because they earn no income off of it, okay? So, Paula, I have a very, very deep question for you, okay? Since the banks don't earn any income on their cash, right? Why is it that they want to stop us from going into the bank? Why is it that they want to stop people from coming back or limit the number of people coming into the bank?
Help them save.
Help who save?
The consumers.
I think because of
Colette?
the new technology and they want them to get used to the electronic banking.
You're on the right track. But let me just go back to Colette for a minute.
I think,
You
well, can I
really?
answer, Mr. Fountain?
Sure.
You said, why do banks want people to not come into the bank, right?
Yeah. For cash.
Because you said for cash?
Yeah, we're talking about cash.
Oh, I was going to say something to do with wages and salaries, but I guess not.
That's it.
Um,
That's it right there.
What's that?
They
Go
want
ahead,
them to
Colette.
use the ATMs.
The less salary, the less on the operational side, the more money they can save. The less staff members in, more on the profit side for them.
This is the bank.
Bye-bye.
Okay. So let's get something cleared up. The bank don't do nothing for its consumers, for its customers, right? Unless
Not
it makes
necessarily.
sense to the bank.
Mhm.
So they're not doing that, right? Because they want you to save.
Right.
The bank
No.
does it, like Colette says, to try and minimize their expenditure. If you earn no money on cash, the more you handle it, the more expensive it is. Is that not correct, Carla, Colette, Anthony,
Yes, sir.
Angelique? Okay, Ms. Cartwright, you would agree, right?
Yes.
Think about it.
Yes, I agree.
Every time right? Somebody comes into the bank and deposits cash or takes out cash. How many times that cash is going to be handled before the bank closes? Okay. Before the cashier opens up, they got to balance or count out their cash to be sure that they have it. When the cashier closes, they got a balance. That takes another staff member to go over there and check their balance. They balance, then someone checks it. Then after that, it has to go and be stored in the vault overnight with all the security protocols and everything that goes in it. But this service is not making any money for you. So what do? You use the technology, as Carla said, to minimize the amount of cash that you have to handle. So Scotia Royal Bank says, I will not cash checks drawn on Royal Bank for anyone who does not have what? A bank account with them. So if you go to your bank, deposit the Royal Bank check into your bank at Commonwealth Bank, right? They are not going to handle cash because it will come through the ACH payment system, correct? If you do a transaction through the ATM, the bank does not have to handle cash to the same degree as if it was through a cashier, right? If you use your debit card or your credit card or your checking or your check, the bank doesn't have to handle cash. The less cash the bank handles, the greater the opportunity for them to make some money off of the cash. It has nothing to do with service levels. It has nothing to do with trying to help the customer or anything like that. Fundamentally, they're trying to minimize it because they want to cut their costs. Okay? Now, the reason I keep saying things like this is because you have to understand or appreciate the way the banks are going. They're trying to get to the point where they can make more money, right? And one of the easiest ways to do that is to reduce your costs, which is why they're cutting the amount of people that are in administrative positions, right? Because the technology can be used to replace the people. So there are not an awful lot of jobs going to be in commercial banks in the operations. Remember when, any of y'all remember when operations used to be in each individual branch? And now it's in a central operating area? And that means they cut down on the number of staff. Okay. Other sources, other uses of funds, bank loans. Now, this is the primary use of bank funds, right? And this is always going to be tailored to the borrower's needs. And what drives that is competition, okay? And that's something for all you guys to remember. They're not doing it because they like it. They do it because of the competition. And if there's one thing I hope all of y'all take away, one of the things y'all take away from this course is, right, banks are driven by profit, okay? So the types of loans that a bank can have, right? They can have business or commercial loans, working capital, term loans, bullet loans, line of credit, revolving line of credit, syndicated loans. Let's just talk about working capital, right? This is when the bank lends money for you to specifically use it to purchase inventory, right? And other things that are considered part of working capital. Term loans, a loan for a specific length of time, usually in the Bahamas, 5, 7, 10 years. Those are when you see term loans. A mortgage loan is a term loan, but it's for a longer term, usually 25, a maximum of 25 years. Okay. Bullet loans, just a loan where the principal is repaid at the end. Lines of credit, an agreement between the customer and the bank where they can borrow up to a certain amount, right? Paid it down and then come back and borrow some more. Revolving lines of credit, renewed every 6 months or every year, okay? and syndicated loans, where a group of banks get together, right, to lend to a single borrower. Okay, so when we talk about types of loans, we have consumer loans, right? And in consumer loans, we have installment loans, mortgages, credit cards. Now, I use the word credit cards there, but I mean plastic. That's debit cards as well as credit cards. Okay? Yeah? When you use your debit card, the bank charges you a fee. If you go overdrawn, they will still allow you to do it up to a certain amount, right? So now they're going to make interest over that little overdrawn portion. Mortgage loans are straightforward. Installment loans. These are when we're referring to things like consumer loans, like furniture, car, vacation, school fees, whatever it is. Whatever it is that you're borrowing from. Not from, borrowing for. Okay? Now, the next thing that the bank uses is investment in securities. Banks purchase securities as they tend to be more liquid. Remember, the bank can't lend out all of its deposits, right, as soon as they get them in. Okay? So if they leave them on their books as cash, there is no interest earned on that cash. Okay? So what they try to do is take their excess cash and put it into highly liquid securities that can be found in the money market. Okay? So they purchase securities that they tend to be more liquid. The process is quick and easy, using very little resources compared to customer loans. And although unsecured, you can manage the investment via the credit rating. So they can put the money into something that they can get a return on, but it is not as involved as making a consumer loan. If Commonwealth Bank has $500,000 million in excess funds that it considers to be excess, they can place the money with Bank of Nova Scotia for 30 days, okay? If Bank of Nova Scotia will take it, yeah? Or they could try to get Carla and all of her friends, right, to try and make loans to consumers for up to $1 million, okay? The second alternative, the loans, will take longer to do, okay? The disadvantage for putting the money into the securities is that the return is much less, significantly less. You get a much lower rate of interest, right, than the rate you would get on customer or consumer loans. Okay. So the types of securities that the bank uses, right? Government issued securities is the first place they're going to put the money because it has the lowest risk, or is considered to be riskless. So that's government registered stock in the Bahamas, and that's US Treasury bills in the United States. The next place they look to put it is in corporate and municipal bonds. Notice they're going to go by the rating there, okay? And these bonds have to be very liquid. And then the next place they'll put it is mortgage-backed securities. Again, these can be very liquid, okay? You all know what government-issued securities are. You know what corporate and municipal bonds are because we did it in bonds. And you know what mortgage-backed securities are because we talked about it in the mortgage markets, okay? They can also use it for Fed funds sold, which is when they lend it via Fed funds to other Fed member institutions, okay? They can lend the money in repos to other banks. And of course, they can have euro-dollar loans, which is basically where they place a deposit by the euro into the euro-dollar market. Again, you've seen all of these before, right? It's just the reverse of the deposit side.
Fountain, 1 second, go back to that, please. Okay, thank you.
Okay. Now, banks also use money to put into their fixed assets because they need to purchase the building, the headquarters building. They need to purchase the equipment, the desk, the computer equipment, all of those kinds of things they have to get. Okay, so that is usually a very small amount, but they have to use it. That's where they use the funds. And then proprietary trading. Now, this is something that you need to be sure you understand. They use the bank's funds, not the depositor's funds. So they're using the funds that we would consider generally to be coming out of retained earnings. Okay, and they make these investments for their own account, right? And they do that as a means to make a profit. So the dealers and the banks in New York and in Toronto and so forth, right, are buying and selling foreign currency, right? They're active in the money market, okay? And they're doing that to make a profit for themselves. They are not taking instructions from their customers to buy something for their customer's account. They're doing it for themselves, okay? It's lucrative, right? But it is risky, okay? It is a much riskier than lending, okay? And it gives you a much higher rate of return, okay? And it uses up a lot of your money. That is the depositor's money. But it is risky, and so it is monitored closely by the regulatory authorities. In the Bahamas, we do not have commercial banks that do this, okay? None of the commercial banks engage in proprietary trading. Okay, so we're going to stop here. Okay. Okay. The chart, the exhibit 17.4 that I'm referring to, right, on page 457 in my text is similar to the one that we looked at, for the deposits. And the one for Horner Bank, right, this is what you would see on a typical bank's balance sheet. So we're going to be doing that later. We have a test, right, to do, and I'm going to send you that email in a few minutes, in a few seconds actually. Okay, so everybody hold on. It's good to see that some of you are still here. Nobody ran away with my boring. Whenever you get the email with the test, you can start. The test ends at 8:30, and you need to send me back your email, right, with your answers. Please make sure you put your name on the test. Okay? Good luck, Carla. You just seem to be having such a hard day. And you're even talking to yourself. Martine, that's you?
I'm here.
I would recommend that you be a part of. Also,
Congratulations. congratulations, you've become a blonde.
Yeah, I hope you give this blonde some not so difficult questions.
Well, we'll see. Okay. Have you gotten, Carly, you got the email? Miss Cartwright, did you get the email?
I did.
Great. All right.
I see no email yet.
What was that, Miss Ferguson?
I see no email. Let me see. Hold on. Let me come out and go back in. Y'all log it in on the computer? Unmute this now. Look on it. My thing should be login, man. This is our last thing for that. It should be saved on your computer. I think I use that. I just tired of all these computer shit right now. I just tired of all this shit.
Miss Ferguson, are you talking to me or are you talking to somebody else?
Sorry, I trying to sign in on something that's charged to get this email thing, and I'm frustrated. I am done with. This could only be over and let us just sit in class. I tired of all this. See if that's that. Do it. Let me give you the code.
I would suggest that you turn your mic off then.
Mr. Fountain, I'm convinced you make these tests for us to fail.
Hello.
Hey, Alia. Can you talk for 2 minutes?
Yeah.
Okay. First of all, nothing's happened. Everything's fine. Nobody's hurt. So don't get
Okay.
don't get into anything. But I'm
Can
in
you
the
mute
middle
your
of my.
mic?
What was that?
Can you mute your mic?
You have 3 more minutes. And once you're completed and sent it in, you can leave. Okay, ladies, you're into your grace period now. It's 8:33. So I'm giving you a couple of extra minutes grace.
Can you confirm you received mine, please? Hello?
Yep, I'm looking at it now.
Okay, thank you. Good night.
Good night.
Okay, I think mine is sent. Good night.
Good night.
Okay, Mr. Fountain, I just sent mine. Good night.
Good night. I got it.
Okay,
And you
thank you.
could confirm if you get mine, Sis Anthony.
I will. I just did. I received it, Dominique.
Anthony.
Anthony, give me a second.
Okay.
Yep, I got yours, Anthony.
Thank you. Good night.
Good night. Come on, caller. Let's go. Monty,
Mr. Fountain, did you, hold on. Okay.
You could check
Caller, I have
mine.
yours. I have yours, caller.
Anything is in it? Like, is that's the right one?
I have to save this to send this, right? Sorry. Yes. I thought I sent it.
Yep, I have yours, caller.
Okay,
It's
thank you.
Mr. Tingham, it's saying mine says a read. I trying to save it to send. I just realized it's saying this only a read only document. How I could change it? Yeah, go to edit, no? Or I could go right straight to send. Let me see something. Share. Oh yeah, I could share it. Send it as a PDF. Let's say it.
You can send it as a PDF, just so long as I get it.
Okay, give me the email again, please, because I can't. COB lecturer
at gmail.com.
COB.
Caller, I
Yes.
got yours.
Okay, thank you.
Okay.
LECT or Gmail. COB lecturer at gmail.com. Mr. Mr. Fountain, this may come from my daughter email. Look, tell me if you may, which
Once
email.
once I get it, it's fine. Yes,
Okay,
Shonette,
tell me if you get it, please. You
I
may see
will.
something showing Mercedes Johnson.
That's not you?
No, that's my daughter, but I using a laptop, so. This is your laptop, but I think Mercedes saying sign in on this.
I got
You got
yours,
it?
Shonette.
You got it?
Not yet, just hold on.
Brianna. Oh,
Shonette, I got yours.
come check, see if my email gone, please. Brianna, you don't know to check it. Leave it. Leave it before you go off the thing.
You can't send us something?
Yeah, 100. Ah, come check, see if the email gone for me, please, or come send it. Fanny, I know. Come send this. I had a long day. What you mind? You could turn over everything?
What you send it on?
I don't know. Send it from here. I can tell you the email. Let's see if it gone. I press.
You see it?
I try to save it. It's a read-only document.
Oh, wait.
But you could just snip that. I just want it sent. My email login on it, you know. Even at two, so go to my email. Hurry up, man, because it's done past 5. Look on here somewhere, my name login. I see my email.
I mean, you 11 minutes over time.
I asked you to save my thing for me to charge up my iPad. You didn't know. Oh Jesus. COB left. Just see it come up. That's my step. I don't even got to do all of them. I'm thinking my name, you can get it.
This?
I don't know what you saved that as. No, that's from the 3rd of March, but you saved that one else just now.
You can save that. Quick on.
See there?
Yes.
I think you talking about
Yeah.
this. You save it. Open. Yes, they send without tax. Yeah. Press OK. I can't wait for this to over.
Send it.
Okay. Thank you.
You're welcome.
Mr. Fountain, can you confirm if you got it, please?
I'm checking now. Yes, I received it.
And something is there, right?
Yes, it is.
Okay, thank you. Good night.
Okay, good night. Okay, Shonette.
Hi, Mr. Fountain.
Hi.
Mr. Fountain, I am having a really hard time with this. Like, trying to manage my time with work and all of this is a lot. And I saw where you said you're not accepting late papers. So I honestly was on the 3rd question and I didn't get a chance to finish. I have gathered all my research and everything. And this month was really rough for me at work. So
Okay.
after
I'm not accepting late papers, okay? Because that's not fair to the other students.
I know,
right?
I know that. So
I didn't see it, so I asked you about it. That's it. Okay.
Okay.
Yeah. But let me make a suggestion to you for anything like you in any of these courses. If you are running late and you cannot get it all done, better to send in something than to send in nothing.
Okay.
Yeah.
Yes.
So if you were on question 3 and had completed question 2, you should have sent question 2 in. You know,
Right.
at least you get something. Hey. Okay.
Right.
All right.
Correct. Okay.
Okay.
But do
Take
you
care.
think that would affect me from passing the course? but just not that
I
great.
don't, it's hard to say because there's the project that you have to do, and then there's the final exam, okay?
Okay.
And everything comes down to you get 6 tests and you drop the worst one. So you get
Okay.
a chance there, right? The project, it's similar to what you did in the midterm, and the more work that you can put into that, the better chances of getting a decent grade. And the final,
Okay, great.
well, it's a final exam. Yeah.
Good.
I have
Yeah.
known some of my students have not done the midterm and still passed the class, but they ain't passing with no A's. Okay.
Okay, I just need to pass.
Yeah, that's all you need to do, and I'm happy with that. Okay.
Yeah.
Okay.
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 All
Good
right.
luck.
Thank you so much.
Okay. Good
Thank
night.
you. Good night. Okay.